my phone also.
Cool.
I'm gonna give it a shot.
All right. Cool. Well, it looks like we are live. I want to welcome everybody again to our Renovation Roundtable. I'm the host, one of the co-hosts, Jeff Onofrio, along with Matt Piccaro. What's happening there, Matt?
What's up, guys? How's it going? Matt Piccaro from the 203K Way here.
Yeah, absolutely. Well, listen, guys. One of the things too is we're trying to do this a little different. We're really bringing in a couple of new people, which we'll explain who they are in a few seconds here. We're also trying to. Matt and I are both also trying to go on Instagram Live. So I have no idea how that looks or how it sounds. So.
Yeah, I got my Instagram Live here too. What's up, guys? I got a bunch of people on here. We're doing our live roundtable, live Q&A about the 203K loan. Got a lot of 203K experts here. So if you're on my Instagram Live, you're not going to be able to see, but hopefully you can hear, and we'll try to get everybody's questions. So make sure you post your questions, any questions you have for any of us, and we'll try to answer it here today.
Yeah, the questions on Matt's got his own Instagram up, so he'll let us know if he gets any. I got mine up, so I'll do my best to turn around and look at that as I can. And then also, if you're on Facebook, please feel free to ask those questions in here too. This is the opportunity for you guys to ask any questions. So with us today as our special guests, we have kind of that dream team we always talk about, or Matt talks about, I really should say.
Yeah.
And, we've got Stephen Depaul. Stephen Depaul is a HUD consultant. Steve, you're located where? And just give us a little bio on you and what you've been doing when it comes to 203K.
Hi, everyone. Yes, my name's Steve Depaul. I've been doing 203Ks since 1993. I've probably done well over 6,500. So I have a couple under my belt. I know pretty much every nook and cranny there is. Currently, right now, I have 240 active 203K and home styles going on in New Jersey and Eastern PA.
Awesome. Yeah, I can attest. I've been working with Stephen for close to 10 years now, and I've done a lot of projects together.
So God bless you, man. Yeah, one was enough for me at one time. So hats off to you guys running 240 of them.
I got a good team.
There you go. Well, next, we wanted to also bring in, because we thought a real value add. We haven't really had this type of person on yet, which is a contractor. A guy who's done a ton of 203Ks, a guy who's worked actually with myself and also again with Stephen. So somebody who's also, really kind of worked in that team mentality. And our buddy here, Dave Anico from DMF Construction. How you doing today, Dave?
I'm good, Jeff. How you guys doing?
Good. Give us a little background on you and your business, man. Tell us a little bit about what you've done and how you've incorporated the Ks and the home styles.
Sure. We've been in business about 20 years. We've been doing Ks and home styles for over 10. Probably a couple, 100-200 under the belt over the last 10 years. Various sizes, designs, some big, some medium, some small. It's a good program. I like working with it. We're familiar with it. And so far, so good.
Cool.
Yeah, I mean, I think probably one of the questions I get asked most are about contractors. Obviously, for me, my background's in construction. My dad's a general contractor for a long time. I think he did carpentry with Jesus, but he's been doing it a long time. So for me, the construction aspect wasn't so much the taboo aspect. It was definitely the easier part of the process for me. But that being said, a lot of people struggle with either finding a good contractor that's willing to do it. So, anyone that's live right now, anyone that has questions for a 203K contractor specifically, any things that you struggle with contractors, I think it's a huge value. And Dave, we're really grateful to have you here because, we get a lot of questions with that, and it'd be great to hear your input on that.
Absolutely. Dave,
Matt, happy to be here.
Yeah, why don't we I got a simple one that I think that could really get things kind of kicked off here. How do you, Dave, and you, Steve, work together? How does that, what's the synergy there when you guys, obviously you two have worked together in projects, but let's take that first project, the first time you guys ever worked together. What does that look like? And how does that translate for somebody who hasn't been in that type of position before?
Steve, you want to go first or I'll go?
You go first, Dave.
Okay. Well, I guess first and foremost, it's crucial from my perspective to have a HUD consultant like Steve because he actually knows construction. So a lot of times I'll get a bid from a homeowner or the HUD consultant report, as they would call it. And by the time I review that, if it's way off, that sets me back right off the bat. So I'm kind of starting off potentially behind the ball if there is a HUD, that either leaves things out or is not that organized. The second part of that is I can't really get paid or reimbursed on these jobs without Steve doing the draw inspections and turning that around in a timely manner. So not only is it crucial for the homeowner, in my opinion, I probably couldn't do these without top flight consultants like Steve because they're hard enough or, getting reimbursed or there's a lot of paperwork, there's a lot of detail. And if things are missed, that it's even more significant than on regular construction projects where you do get money up front and things like that.
Got it. How about you, Steve?
Yeah. So it's really important to have a contractor that is a good estimator as well. When I go out and do my initial inspections, I go and find out all the mandatory items, and then I ask the clients for their wish list items, and then I put together a scope. When I send it out to a good contractor like Dave, he always comes within 10% of my number, whether it's high or low. And that's the parameters that I look for. I'll even go as high as 12%, depending on the contractor's liability, his overhead and profit. So in other words, if I come out and I say that the job is $30,000, the contractor should be within 10 to 12% of that number. And Dave always is. We have a little issue right now with COVID, and material prices are through the roof. Okay, so it's good to have a contractor that is up to date on his quotes from his supply companies and everything, because we don't want to get into a situation where we do a write-up, we close it with a certain dollar amount, and then the contractor hits the homeowner up for a contingency draw immediately because of the incorrect dollar amounts that they put on their scope report.
Good answer. Cool.
Right. I think, that's a big thing right now. And especially with how volatile material prices have been, just one little note to anyone watching here, sometimes when you get a quote from your contractor, sometimes it takes you, some time to close, right? It might take you a couple months. In those couple months, they may have given you a price with 2x4s at, $5, and now they're at $8 or, what it is. So it's kind of crazy right now, definitely crazy times, but, making sure that your contractor is getting the right quotes on material, especially now, that's definitely a great tip. And something that gets missed a lot. I hear about that all the time.
Absolutely. What kind of projects do you guys find yourselves in? I mean, I know Steve, you're in everything. Dave, you said you kind of do big, small, and everything in between. Give me what's the biggest renovation project you've ever done? Either of you guys.
Go ahead, Dave.
No, good. All right, I'll go now. I'd say the biggest homestyle OK one was probably about $1 million. A lot of that, not a lot of it, at least 30-40% of that was out of pocket by the people.
Wow.
But the loan, I think, was for the maximum amount.
Right.
And I think you had it. I think it was in Chatham. So.
Oh, that's right. I was on mine. I do remember that.
Yeah, that was a pretty big custom build.
$100 deal, yeah. Yep. On my side. I didn't realize they went that high.
Quick question on that.
They went for it. Definitely.
Quick question on that, Jeff. So I've heard a little bit, and as some of you may know, I'm looking for a house right now. Me and my wife. The foreclosure market's a little dried up, so especially where I am. So we've been looking for the right one. But jumbo 203K, jumbo home style loans. Is there a limit that you guys would lend on, Jeff, in terms of how large of a 203K or how large of a home? Because I experienced this, but I'd just like to get your input. Because some people ask me, what's the limit on a 203K loan? I know it's kind of a loaded question.
No, it's a good question. There's really no jumbo product out there. There are a few lenders who have some proprietary products. Most of them, to my knowledge right now, especially in the volatile world that we're in, they're not actually offering them. But every lender who does do a home style or a 203K can go to the county limit, which in a high balance county, such as in North Jersey, where both Dave and Steve both are, and also where you're at, Matt,
right.
I believe it's 729. I'd have to look it up. I feel bad that I actually don't know off the top of my head, or maybe it's 760.
So anything over 500K is considered a jumbo loan, right?
It's considered high balance. High balance is anything over the conforming limit. The conforming limit is the 510. So anything between 510 to that 760, I believe it is, that's going to be your conforming. That's going to be what we call high balance. Anything above that number gets even higher, meaning that's where you start going into jumbo territory, and you're very limited on lenders for that product. I mean, almost non-existent. Now, if you go up in units, that unit count also increases as well. So it all really depends on how many units a single. If you give me 1 second, I'm just going to pull it up because now I feel like I can't believe I don't actually know this off the top of my head, doing so many up in North Jersey. But give me 1 sec here. Let's say, so like Bergen County, right? So one family is 765,600. That's for a one family, and that's a high balance. So anything over 510 all the way up to that 765. If you go into a two family, you're up to 980, 325. A three family, 1.1, almost 1.2 million, and then a four family you could do up to almost 1.5 million. So it goes up with the unit count, but it is different based upon your county. So anybody has a county specific question, feel free. I'll also do you a favor, and I'll actually post the link on where you can actually look up the FHA loan limits right here and look it up yourself too.
Yeah, that's a common question I get. Common question I get for sure is the limits. I tell people most of the time, in many, they're like you said, there's some parts of the country that have kind of maybe limits that haven't caught up with the market yet. But especially some high cost of living areas, it's tough to hit those limits. Especially like kind of the strategy that I teach people is to go for stuff that you could build equity into, right? So you're trying to look at stuff that's at the bottom of the market, not the top of the market in the first place. Usually people are limited first by their income before they are limited by the limit, especially in the high cost of living areas. If you're duplex, I think in New York, it's like 900 something thousand, so. No, great question. Great answer. Great question. I think a lot of people ask that. I have a quick question here. How do I know if a property will qualify for a 203K loan? Interesting question. I'm sure you guys know the answers to it, but if you guys want to all take a crack at it.
I'll take a crack at it. How do I know that a property will qualify for a 203K? Every property will qualify, more than likely.
There you go. People get confused on that question. It's a big question, but I tell people, a big one too is people also don't know that you can offer on as is properties with a 203K. It's not known enough out there that you can buy a foreclosure. You can. Now listen, will banks sometimes prefer cash? Yes, that's up to the seller to make that discretion. But the reality of it is you can offer and you can get approved because the bank is understanding that you're getting a 203K loan. I tell people a conventional loan, the bank wants to make sure they're not buying a piece of crap, right? So, when you have a 203K loan, you're basically, and you have a 203K consultant and a contractor that give you all the evidence to show, hey, when we're done with this, it's not going to be a piece of crap. It's actually going to be a livable, code compliant, unit. That is great because it gives you the ability to finally compete and buy some of these properties that otherwise a bank wouldn't finance.
Yeah, it's good. The one
most banks, sorry, Jeff. Yeah. Most banks want to sell it to an owner occupied because they're going to make more money on that sale as opposed to an investor.
Thank you. Please, Jeff, make sure you clip that, all right, on this recording. I want that clip, and I need to post it out to my entire audience because, Yes, Steve, you nailed it. Yeah, I found that. I was willing to pay way more than a cash investor was willing to pay on the property, just because I had less overhead than they did. I mean, I flip properties now, and I tell people all the time, I can't buy properties for what they're listed at on the MLS. I need more margin. That's why I go for off market. But the 203K loan, because you're getting owner occupant, rates. It makes it much easier for you to buy it and still get a nice deal in the process. So that's a great answer. I'm so glad you hit the head on the nail on that.
Yeah. Well, I just wanted to add one thing. There is one little caveat to that, because it's almost every property qualifies. Because I get phone calls every once in a while from clients who want to buy a house where a builder started a property, let's say as a spec home, and they ran out of money and they weren't ever able to finish it. If that home never had a CO, or nobody ever lived in that property, then that house does not qualify for a 203K. So that's important to keep in mind, because ironically, I do get those calls. It comes up, it happens. You'd be surprised how often it happens.
Jeff, doesn't Fannie Mae though will allow that?
So Fannie Mae allows for you to be able to do it. However, Fannie Mae made a change to the guidelines a little while back, and basically what they said is the property has to be 90% complete. At one time, they just called it substantially complete, and they changed the guides to now say 90%. So basically, it means the drywall's got to be in, the outside's got to be buttoned up.
Wow.
Really, all you're really looking for is finish materials and finish at this point. Now, I'm sure 90 or 85 or 80 could be stretched a little bit.
Yeah, you could.
You know what I mean? But Matt, you also went you muted yourself. I don't know if you meant to.
No, I said yeah. I was muting myself.
Oh, okay.
Just to let you know, when you have insulation and drywall in, you are 60% complete. Okay.
Good to know.
So that's if you take down the specification of repair and you have all these breakdowns, once you get up to drywall, you're 60% complete. So that's pretty substantial, if you ask me.
Good to know. Good to know. We do have a couple of important questions here.
Yeah, we got a bunch of questions. Let's try to get through some of these.
Yeah, one of them is there a list of approved contractors? And that's a loaded question. So I'm gonna mention from my side, and then I'd like Stephen to give his side, and then we can even ask Dave, and Matt. Obviously, everybody can answer. There is no approved list. Any contractor can do a 203K or a home style at the end of the day. What it comes down to is do they understand how they get paid? Are they okay with how they get paid? Are they licensed, insured? And then also, are they qualified for the job? Meaning, if it's a guy who does kitchens and baths and does $30,000 projects, and all of a sudden we're bringing him in to do a $250,000 at a level, that's probably not the right contractor for the job. So it's a good indication of working with a good HUD consultant and the lender who knows who those contractors are. We don't give out recommendations, but we will give out a list of people that have done successful projects. And then it ultimately comes down to you as the potential buyer to go through and look at those contractors and vet them. And any of you guys want to give your 2 cents on that as well?
So are we allowed to tell them about the one website, Jeff?
Yeah, you can. There's not a lot of contractors on it right now, but you definitely can. Matt knows who they are. It's actually a friend of ours who we talked about having on this show at some point. There's just not a lot of contractors that are actually certified on that site. It's 203kcontractors.com. You could always look there. The problem is not many contractors go through it. That's the one thing that kind of stinks. You could also ask your HUD consultants if they have anybody. Again, we don't want to recommend anybody, but we can give names of people who've done successful projects. So any other recommendations from you, Matt, as to how to find them as well?
Yeah, I think what I was, so like you said, it's kind of a loaded question, right? Here's so 203kcontractors.com became a website that they have a list of some contractors that have become 203K approved contractors. Unfortunately, the way that that's described kind of is misleading, right? Because what I found is a lot of people think that a contractor needs to be approved to do 203Ks. like Jeff said, that's not really the case. Any contractor can do a 203K. So I just don't want people to get confused that that this guy, whatever contractor you use must have this, this kind of third party certification program. As Jeff said, the bank is going to vet them on, on their past references, on their capabilities, their licensing, their insurance, making sure that they're bonded in some degree, they have credit lines with supply houses so they can get themselves off the ground. It's good when your contractor obviously has experience with the loan. They know what they're looking, they know what's going to happen, right? For a contractor that's never done it before, it could definitely be a learning curve. But yeah, there's plenty of places you can find these contractors. I come from the construction industry. I think you should have multiple contractors. If you get a list of contractors that have worked in the past from your lender or your HUD consultant or your realtor or whoever, take that with a grain of salt. Definitely add them to your list, but you should be sprinkling them in with just contractors you get from personal references, someone you might have found on House or Angie's List or whatever, and have them kind of lined up. It's kind of piggybacking on this question that I asked: should we have a contractor before getting pre-qualified for a 203K? And I say to a lot of people, you want to have a pool of contractors at least in your back pocket for when you do get an offer accepted, because once that offer gets accepted, the clock starts. You don't want to now have to scrounge to find contractors and put yourself hopefully not, but in a bad spot, which was what happened with me. You want to make sure that you have some of these guys ahead of the game, right? That's really important. But yeah, I mean, we go a lot into vetting contractors and stuff, and I'd love to hear Dave's input on what he thinks. Obviously he knows as well, but what he would say, what advice he could give on what makes a good 203K contractor, and maybe some strategies that some borrowers can use to find some of these guys that would be willing and able to do a 203K.
I would say it's not that different than hiring a good contractor or a builder for a conventional project, in that the details and the attention to detail is crucial. The difference is on a 203K or home style, that's even more important. But the good part about that is there would be warning signs, or there has been with me. Okay, the paperwork. If you can't get it off the ground, then it's taken, let's say, a potential builder or contractor to give you an estimate in addition to the HUD consultant's report. That should be a major warning sign, because there is a lot of paperwork and a lot of detail that goes into this. And, frankly, a lot of contractors don't particularly like the paperwork or like the detail. They would rather be in the field. And I mean, look, to be honest with you, I would rather be in the field too, but I've accepted that someone has to do all these details for it to run optimally. And there's going to be more complications that are going to get, that are going to be amplified with time if you don't do it right from the beginning. So I would say the best part is when you're getting bids, if it's not done in a timely manner, that's probably a pretty good warning sign. And by a timely manner, 1 to 2 weeks, depending on the size. If it's a monster project, sometimes people will, like, including myself, take a little longer to make sure the price is right. But if you can't get it done in that time frame, that means they're probably either way too busy or
right.
the attention to detail
just to chime in on that also, another question I get a lot is, a lot of people say, well, the contractor has an issue with not getting a deposit to start up. I obviously have my response to that, being in the construction industry, and there's a lot of different ways. I've answered that question, but I'd like to hear your input. What would you tell a borrower or someone, that maybe is looking for contractors, and, the contractor balks at the idea that, they don't give you a deposit in many cases to start up work. You kind of have to wait until that first draw.
I mean, here's how I view it. Obviously, a startup check helps in construction, but it's just not how these projects function. I try to turn that into a positive, meaning whenever we come under contract and there's an agreement and you're waiting on closing, hopefully that is proving that my loyalty and that we're on board, given that we're going to start your project with no money down. The flip side of that is I also very clearly communicate that when it comes time to getting the paperwork done to do the draws, that's on the homeowner, the buyer. So it's a two-way street. Like Steven, the consultant, will do his part with the draw inspection. They get the paperwork out. Just like people expect myself and my team to show up to work every day, if we're rolling along and the owner takes, a week or two to get the paperwork back, and then there's another, you have to wait for the check to come. It swings both ways, so to speak. So,
yeah. And what I say typically too is, guys that, and this is a full disclaimer, growing up as a son of a contractor, seeing a lot of really tough years where my dad didn't get any work. Admittedly so, when he finally did get the first job after months and months, he gets a deposit. That deposit rarely is going to startup costs, right? I hate to admit it, but that's the reality of it, right? If there's a guy that's dying for a deposit and he can't get now, mind you, my dad was able to mobilize on, credit with what he had from, from his different suppliers, whatever. Mm-hmm. But when times are tough, he's dying for that deposit. If that deposit makes or breaks that contractor's ability to start the job, it's a huge red flag. And because I've seen it firsthand, and it's a red flag, and I would tell someone maybe at that time not to use my dad because, who knows, he's not, his cash flow is in jeopardy right now. So that's another thing I tell people is if they're having issues with that, there's plenty of contractors out there that can float. I'm in high profile construction in Manhattan. I mean, there's not a single contractor here that starts up without with a deposit, right? We don't do deposits. They all get, it's understood that you should be able to ramp up and get yourself going until you get that first draw.
Mm-hmm. What kind of tips, Stephen, would you give somebody just getting started and starting to look at properties? What does it look like for you for that first, that client who's coming out and he wants to do his first inspection report? What kind of tips do you want to give him to make him feel comfortable as you're meeting them for the first time?
So if someone finds a property, let's say they didn't find a property. Let's say that they're looking and they're not sure how much the construction cost would be. They can contact my office and I could do what is called a feasibility study for them, which I'll come out and I'll inspect the property as if I was doing a full 203K. I'll find out what all their mandatory items are, and I'll also take in some of their wish list items, and I will produce a document that tells them how much in my eyes, it's going to cost. And then with that information, they could base their offer. If it's a property that they want to purchase, they could use that and base it on their offer that they give to the bank or to the seller. I want to go back a little bit about the contractor thing. We're not allowed to be giving out references, like you said, Jeff. But for me doing this so long, I have a 4-page Word doc with contractors that have been doing the 203Ks that we haven't had problems with. The ones we did have problems with, we eliminated them off that page. So I will always give the names of the people in that location where the contractor is. I don't want a contractor to travel more than an hour to get to a job. That's not conducive. But I will offer that information to the clients because there's not a lot of people out there that like to do the 203K because they feel that they're going to get jammed up and it's a government program, which it's not. And I try to explain to the contractors who are new to it, speaking to them like a contractor because I am a contractor also. And after I get done speaking to them, they usually are on board with the process.
What do you say to them? Just out of curiosity, some key points. What do you do to help talk them off the ledge? Off the ledge,
yes. Good analogy. So I tell them, look, you're protected. If you sign the documents and get into this, your money is protected. I am there, like, even if you have a dispute with the client, I have to come in there and do an exit inspection if you're going to walk away, and you're getting paid up to that point for everything you did. I also tell them that I am a contractor also, so I understand how important it is to be paid. And at my office, if you call us up for a draw, we're out there to the project within 48 hours. And we produce all the documents. We send it out via DocuSign. So we speed up the process. As long as everybody signs it, it goes right to the lender after we do our draw request. Now, if they don't sign it, my office contacts whoever didn't sign it and make sure that they sign it right away, because we don't want that sitting in our DocuSign application.
Great. Are they finally allowing DocuSigns?
Only lender that doesn't is M&T. M&T Mortgage.
Lo and behold, the one that I used.
Now,
pain in the ass.
Here's the problem. They say that they don't want electronic signatures, but if you sign a document, scan it, and email it, that's an electronic signature.
Yeah.
But we can't fight them, so we just do it a different way.
Yeah, we sucked.
No, we don't want a lender bash, because that's
no lender bashing. I love it.
This is an anecdotal experience, right? Take it with a grain of salt. I am not making a sweeping generalization. I'm just saying it was a pain in the butt. Anyway.
Well, we got a lot
of drug department.
We got a lot of questions coming in. So guys, keep posting the questions. We're going to talk a little bit more, asking some questions of these guys ourselves, and then we'll kind of hit some of those questions up here in a few. And some of this, actually, really one question is interesting here. I just want to kind of hit on, and I don't think Stephen would really be the person to really be able to answer this. But he said of the 6,000 plus, Ks that you've done, how many generally add enough value for them to be able to refi out a PMI?
Good question.
The reason I'm at to say that's probably not something Stephen's going to know per se, and not to say he shouldn't know, but he doesn't appraise the properties. And I think that's important for the people to understand. Like, the appraiser is who does that. And he's working on the construction side of it. The comps piece is really where your realtor comes in. And that's what's going to help you determine if you're going to be getting a buy that's going to help you to achieve your goal. If one of your goals is to come in to create equity. I talk to a lot of different people that look at doing these 203Ks, and you got all kinds of different people, right? You have people that their goal is to come in and they want to create a certain amount of equity, and they're making their numbers off of those numbers. And I know this is probably some of the stuff that you teach, Matt.
Yeah, these are my guys, basically. The guys that are, financially responsible, trying to make a good move, not trying to buy retail, investors, people looking to house hack, whatever. Yeah.
But there are, it's a great, there's strategy. There's nothing wrong with it. What I was going to say is there's just other people that do it where there's other people that are buying them with the intention of, hey, I'm going to live there, like you said, house hack, and then I'm going to rent it out, and I don't need to make all that equity because I'm fine with building a portfolio of single family properties. But then we also have people that are coming in that just want to create their dream home. They're not in it.
Yeah,
they're not in it to make a bunch of equity. They're not in it to hit a home run and make $100,000. They just want to move into the house of their dreams in the area that they want, and they watch the HGTV, and they just love that idea of building what they want. It doesn't always end up being about the money side of it. So I just wanted to kind of mention that because it's a tough question for anybody to really answer when it comes to that ability to refi out. That really is something you kind of got to look at, and that's part of your purchase process, really, of working with your realtor to understand what the comps in the area are going to support. So.
Yeah, I mean that's really what I teach, and kind of why I got into the 203K. Part of it was to build equity, right? Build equity, be able to use and leverage that equity to buy more property, which I do, right? So that being said, like you said, Steve doesn't really appraise it, right? I mean, he will make sure that you're not biting off more than you can chew. The alternative to it is if you're buying the house for $200,000 and it needs $200,000 worth of work, but it's only going to be worth $200,000 when you're done, the bank's not going to approve you for that because your loan to value is way off. 203K lets you though borrow. I mean, they go up to 110%, right?
110%. Yeah, that's
crazy. It's crazy, but I mean, like you said, if someone's just looking for their dream home,
Yes.
it's nice to have that little buffer there. But, for the strategies that I teach, obviously I'm looking to get people to buy at 60 cents on the dollar, whatever it is, buy foreclosures, buy that to try to build that equity. That's usually what my following is looking for. But I tell people, like, 203K across the board, like, I think obviously everyone should use it no matter what you're trying to do, just because I think it's a great financial decision. So.
Absolutely. Before we get into those tips, or questions, I should say, Dave, what does a meeting like you look like when you meet with a contractor? When you meet with a client for the first time? You want to give us a little bit of an idea what that meeting looks like?
Are you talking specifically like not under contract yet, like first time, first appointment, first meeting?
Or I mean, they could be under contract. I mean, you do a lot of, just so we're on the same page too, so everybody knows. There's a lot of people that I know in particular that Dave deals with that are people who, are adding levels to their properties and expanding their properties. It's not always purchases. So just so everybody knows on here, I know a lot of people, obviously, especially that are following with Matt, that those are people that are looking to buy something. A lot of times, and I know in particular, I do a bunch of them with Dave, it's somebody who already owns a property and they just want to create, extra space, especially in today's world, in COVID world. They're looking for extra space for offices and extra space for their families. So
ADUs are taking off now too.
There you go. So, so just, I guess as a general statement, Dave, what does it look like when you meet with somebody for the first time? How does that meeting go?
Okay, I'll give, I guess, two parts. The first part is, especially, let's say, a first-time buyer. This is going to be their first-time home, or let's say they're selling a condo and going to a home like that. Those are, I guess, more thorough in the beginning, a lot more detailed, because there's a lot of things that I'm, I guess, trying to help them understand that what's going to go into this beyond the construction, meaning not only will I attempt to go over the renovation part, but let's say I'll explain to them the maintenance, things down the road, landscaping, anything I think they're not going to know of. Because, I mean, I have done jobs where people, yes, they approved, yes, they did the project, everything went fine, and I found that at the very end that they literally did not have, $1 left over. So then that's more stressful for them. So there's more detail with things like that. The second type is usually what you were referring to, an existing owner that's either upgrading and doing a bigger project, or refining and doing the addition or the build or something like that. Those are, I guess, longer. There's a lot of details that go into it with the architect and everything like that, but it's usually the people know a lot more of what they're getting into on those, because they've usually been doing their homework for months before they even reached out to me or an architect or anything like that. In general, I'd say most of the time the people are pretty excited one way or the other. Either it's an upgrade or it's their first time buy, and they're pretty excited.
Nice. Cool. Good. You want to start jumping into some of these questions there, Matt, and see what we got?
Yeah. Did you get them all from the comments section? I know I got a bunch on Instagram, and then I know we have a bunch on do you want to just alternate back and forth?
Yeah, alternate. Yeah, you start on some of yours from Instagram. I'll go on some of the ones here from Facebook.
All right, cool. So this is a common question. I mean, this is a quick answer for all of us, but is it possible to get more than $25,000 on top of the purchase price for a 203K? A lot of people get confused here. What that $25,000 or $30,000 limit that you hear often is something called the 203K limited. That is or it's been called in the past the streamline. That is a version of the 203K loan that, basically, lessens a little bit of the paperwork load, lessens some of the requirements, but is only limited to $30,000. Now, a full 203K, there is no limit. Correct, guys? I'm not speaking out of line here, right? So, So the quick answer to that is, a full 203K, you're limited to whatever the FHA loan limit is in your county, which Jeff was able to post the link that you could research yourself and see what your loan limits are in your county. But yeah, that 30K limit or 25K limit that you hear is with a limited. Now, Steve, quick question for you. I know that you don't need a consultant for these 203K limiteds. I suggest, I don't know, how you guys would, if you've ever worked on some of these in the past. I would suggest that you still use a consultant anyway. Have you done that? Have you worked on limiteds despite not needing to be there?
Yes, most lenders, I would say a good percentage of them years ago were trying to use that streamline, is what they called it then, and not use consultants. And there was a lot of problems. So I would tell you that most lenders, even if you are doing a limited, want to use a consultant.
Great.
The reason why is because they get these contractors' bids that have that nice kitchen and bath in the limited, but they miss the cracked girder in the basement.
Yep.
And the appraiser sees it. Now you have to go back, and now a consultant has to come in because it's structural. 203K limited, you cannot do any structural work.
Right.
So if you have a consultant in the beginning, we can alleviate most issues that would come up.
Yeah, I think it's important to get a consultant in there first and foremost. You know, I've told many of my students, my followers, to get the 203K consultant in there for a feasibility study, even before you get into contract. It's worth the couple $100, whatever it is, to get that inspection, which can potentially save you tens of thousands down the line. You know, there's a lot of stuff that we missed because our consultant came in way later. And you know, that it's a drop in the bucket compared to the long term. So that's good to hear. It's good to hear that banks are still looking for it. But yeah, that's a common question we get. Well, let's see. We got some Facebook questions. How long this is a question for Jeff, probably. How long do you have to wait before you refi out of a 203K?
There's no actual guideline on that. It depends on how you're doing it. If it's a 203K and you're streamlining into another 203K, you got to make at least 6 payments. If you're going to be trying to go into a conventional loan, theoretically, you could do it right away. I'm going to ask you as a client, though, not to screw your lender, because if you do that refi before the 6-month period, you're basically making it so that we have to pay back anything that we made as a company.
Yeah.
That just makes that you're going to hurt the good lenders that are out there helping you. So let's try to wait the 6 months. You know, if you're working with me in particular, I'll give you the date. We can even start it early and just have you close after that.
Close after, yeah.
So we want to make sure you want to protect.
Yeah, in reality, it's taking you 6 months to get by. Well, all said and done, after the project, even if it's a smaller project, you'd be surprised how fast time moves, everybody, especially when you're in a project. It moves by the time you get your CO, by the time you get your inspections done, everything. You know, for me, it was 8 months from the date of closing until I refinanced out. It was 8 months, or maybe like 9 or 10 actually. But my project took 8 months. I was projected to take the full 6. It ended up taking 2 more. But yeah, I mean, you could refinance, you know, within 6 months. Everyone likes to rush the process, but what's funny is once you're actually in it, you're going to realize very quickly that 6 months comes very quickly. So I tell people, once you're done with the rehab, you get everything good to go, you should be able to refinance, no problem, if the equity is there.
Yeah, absolutely. Yeah, no, it's a good question. And honestly, it does, like you said, it does move. You'd be surprised how fast 6 months goes. The FHA requirement, you know, for the projects is to get done within 6 months. But the reality of it is, it really should be extended actually a little longer, because most projects really probably go, like you were saying, Matt, more like a 6-9 month period. Yep. We just get extension requests through FHA for that. So, all right. Well, here's let's see. We got some other good ones here. One person asked, "Are we seeing your comments?" Yes, we are. So if we're not answering them, trust me, we will get to them. Let's see, the entire, okay. Can you finance appliances into the 203K construction budget? Stephen, Dave? Did you guys answer that?
Yes. The only thing you can't finance at a 203K is a basketball court, bocce ball court, and a Bobby Flay grill setup.
Exactly.
Yeah, no crazy luxury items, but there, yeah, you'd be surprised what you can. I finance my appliances with mine for sure. It was part of my kitchen quote. But great question. Good question. Yeah. There's a lot of great questions on Facebook, so we're just going to keep rifling through these. When approved, are they approving you for the total amount for the property and the project? For example, if I'm approved for 300K, the property and work done can't exceed 300K.
That's a correct statement. Now, again, as was mentioned earlier, you do have the ability on a 203K to go to 110% of after improved value. So if you're just talking about how much you're qualified for, then your qualification is for, your lender should be qualifying you for the max, and how you divvy it up is, you know, all up to you and what kind of property you find. If it's 300K and you find a property for 100 and you got 200 to spend, great. But if your max financing is 300, then it's just a matter of how you divvy up that 300,000.
Yep. Great. No, these are great questions, guys. Let's see. Are we seeing your questions? Okay, I saw that. So this is kind of one that I guess I'll take and answer. It's kind of a tricky one, so I'm going to try to navigate through it. For someone looking to get their first investment property, how can the 203K loan start their investing journey? Should you do the 203K more than once? Super common question. It's loaded, so let me try to unpack this very quickly. So the 203K is an owner-occupied property, right? So the strategy that I teach is the live-in flip concept, okay? It's the way a lot of investors got started, right? You know, they buy a property or they buy a small multifamily property, and it is an investment, right? It's an investment, you know, every home's an investment when you buy it. You know, it's just some are better than others. The 203K makes it a real good investment, right? You know, so what you're doing with the 203K, and what I did was I bought a really beat up property, right? I was building equity into the property. So it was an investment in the sense that I was getting a good return on my money through equity. And I was also getting multiple units, and I was getting my mortgage paid off by my tenants. I have since moved out of that property, and now that property cash flows for me every month, because that other unit, it's a 2-unit, that other unit was basically all just cash in my pocket. So the way it started my journey, and what I really try to teach people, is to, you know, look for these properties that, number one, you can live in, because, you know, by the 203K standards, FHA standards, you are using this loan to move into the property. You're doing a live-in flip. You're moving in. You're taking advantage of the great rates that you get as an owner occupant. You're getting low interest rates, you know, low money down. You only need to put 3.5% down. And, you know, this might not be your forever home, just like it wasn't for me. I have since moved on. I live somewhere else, and I rent out that first property. That's kind of what we're looking to do. So ultimately, though, guys, the 203K loan is not a flipping loan. This isn't a loan that you should be used to flip houses over and over again. That's just, you're not using it the way it's supposed to be done. What I can tell you is that I didn't need to do or repeat the 203K. The 203K launched me into my real estate investing career because it gave me, number one, great experience with doing a flip. And it also gave me all the equity that I needed to basically buy another property. I made $150,000 in equity. You bet your ass I took that equity and leveraged it into my next deal within a year. And that 150K I never had, right? I had 10K to my name, and that went to my down payment for my 203K property. So this isn't an investing loan, right? It's an owner occupied loan, but you can use it to leverage yourself into a better position to start your investing career. You guys have any way to chime in on that, or did I nail it there, or what?
No, you nailed it. I mean, at the end of the day, I tell people all the time, like, it's not an investor loan, but there's a way to do it the right way. If you are trying to and listen, I've had it happen in the past. There are people that will call in, will talk to me, take all the information that I give to them, and then, you know, they just use it in their own way to go try to figure out how they're going to do it anyway, as an investor loan, without doing it the right way. And it's not unheard of. But if you take the time to understand how the program works and you follow it and you use it the right way, it can be a great vehicle to starting your investment portfolio.
Yeah.
But you got to do it the right way. Like, and I'll give you, here's a prime example. I have people that'll call me sometimes, and they're going to be like, and they're like, well, I'm going to buy I'm living in this single family right now. It's a single family. It's, 4 bedrooms, 3 baths, 3,000 square feet. Okay, cool. So what is it you're looking to buy? It's a 4-unit in the city, and each unit's like about 700 square feet. And I'm like, and you have 3 kids, and you are going to pull them out of the suburban lifestyle and move to the city, and go into something that's 3 times as small. I mean, you realize I got to pass this by an underwriter, right? Like that's
it's down to you, right?
Like there has to be motivation and there has to be a reason to do it, and it's got to make sense, guys. So, you got to think about those type things. I get it. People want to invest, they want to do things, but just saying that that's what it's for, because by the letter of the law, FHA says this program's not supposed to be used for accumulation of property. If you actually read the handbook. But that doesn't mean you can't do it if you do it the right way. So just something to think about. I know it sounds like a funny story, but honestly, it happens, and it happens.
And now to piggyback on that, let's not forget about the home style, right? The home style does allow you to purchase a single family home, right? That you can use as a second property. You don't need to occupy it. But your rates change a little bit, right? You get 15% down instead of the 3.5%. You might, I'm sure they hit you with a little higher interest rate on those. Yeah. So, there's other renovation loans out there that you can buy a second property with, right? But, the options aren't as favorable. But, that's kind of what I say. A lot of doors open with you. Home style, it's good, but it's a little slow. Now I use hard money. I use private money. It's just faster. I need it to be fast, right? But great question. Can you use potential rental income to be approved for an FHA? It's a good question for Jeff.
Yeah, we can. Right. So you're allowed to do so. There is a vacancy factor of 25%. I will tell you that there's an additional vacancy factor that's been added in right now called it's basically the COVID factor, where we actually take 25% on top of the 25%. So it works out to about 52% of what you normally would be able to use when it comes to rental. Right. That is there to protect because, let's be honest, there's a moratorium on evictions. And until that's lifted, we have to make sure that we are protecting our clientele. So as they are buying something, that they are able to, that they are able to qualify, hoping that, because if everything that they are qualifying is based off of the rent, but they're not going to get the rent, then we've got to have a problem, right? So,
and there's a vacancy factor that you always need to take into account, right? Like a lot of new investors won't do that, but you have to assume that at least 1 or 2 months out of the year, you might not be able to be getting rent. So the lenders need to assume that as well. So, guys, the rule of thumb is the more units you buy, the less they factor into the rent because you have more potential for the property being vacant, right? So it goes less and less, and it's going to affect, and what they're also going to look for, guys, with more units, the more they're going to want to have in reserves, right? Because they're assuming now that, you're going to have to rent this place out. Renting out 3 units could take some time. They want to make sure that you have some money in the bank to be able to pay that mortgage. If they do project that income, you do use that projected income to get that approval. You better have some money in the bank, to foot the bill in worst case scenario that you're not able to rent the thing out as quickly as you want.
Absolutely. One of the guys actually that we work with, Scott on my team, actually just said we actually are doing a 4-unit for $1 million+ right now in California. So just for the people that were asking about those higher dollar amounts, obviously they are being done. We are doing them. So I think that's important for you guys to know as well if you're in those high cost areas. Cool. I'm trying to see if there are any specific questions for, I'm not sure exactly what this one means per se. It says, do I have to live in close proximity to work with you guys on my 203K? I guess Dave and Steve, I mean, what's your geographical region? How far will you go out, just so that the people who are possibly watching here today could, would understand?
Yeah, I think you guys are getting a lot of fans here. That's for sure. You might be getting some, you might be getting some calls and some leads from this live because a lot of people keep asking, where are you guys located? Can we get your information? How far are you willing to go?
Steve, I think you said it best first, up to an hour. I try to keep it to about 45 minutes. That's a difficult question in New Jersey because depending on which direction I'm going could have a lot of change things traffic-wise. But since COVID, it has been much easier to get around. But I'd say about 45 minutes is ideal at most.
And you're where, Dave, so that they understand what 45 minutes means from where you're at?
I'm sorry. I'm based in Union County, Scotch Plains. So
And
Cool.
I'm in Hunterdon County in New Jersey. I will go an hour and a half in all directions. But I have 4 other consultants that work for me, and I cover Philadelphia, Delaware, North Jersey, Orange County, New York, PA, Upper PA, Milford, PA. So we got the Eastern region pretty covered.
Nice.
Yep.
That's great. Yeah, I'm sure. Jeff, you could post probably their contact info or their social media, whatever you guys got, in the comments section of this live. But yeah, definitely a lot of people are asking where you're from. This is an interesting question. As a quick answer, I have a single family property that has been zoned to build up to a 15-unit multifamily. Can I use the 203K to build a 15-unit multifamily? The answer is no. You can only go up to a 4-unit. One cool thing that Garrett mentioned, I think on our last live, was that if you have a 5-family or a 6-family, if you renovate it down to a 4-family, it still works out.
Yep,
that's correct.
We have done many of them.
Yeah. So, guys, if you do find a 6-unit or a 7-unit, you can somehow break it down to a 4-unit when it's done. That does qualify. It just needs to be CO'd and inspected and zoned as a 4-unit once it's done. Does the property need to be habitable before you get approved?
Absolutely not. It could be a building collapsed into the basement.
Yep.
My favorite.
Yeah, those are my favorite too. I tell everybody, especially like my followers and stuff, look for the shittiest house you can in the nicest areas you can, right? Because there's, you can do whatever the 203K really gives you a ton of flexibility. It could be a hole in the ground, but if it was previously a standing structure, you're able to do what you need to do. Now, you can't use it for new construction. That's a question I do get asked a lot. Can you use 203K for a new construction? No, there needs to be kind of what Jeff said before, an existing structure that at one point had a CO, at one point was a building. Again, it could be part falling down, it could be fire damage, all kinds of things. As long as you have the rehab budget to fix it up, to get up to snuff when it's done, you could really do a lot.
Matt, there's something that you should add to that. You actually can knock down a house, use the foundation that's there, and rebuild new construction. So that is allowed. And if you're by any of the coastlines, there's ways to move a house, put existing house on pilings, raise a structure that's in a floodplain.
Wow. So you could use a 203K to lift a house.
Absolutely.
It's good to know where we are. I grew up on Long Island, and after Sandy in my town, Jersey too, obviously, but a lot of people lifted their houses.
Steve, real quick, Steve, what phone number, if anybody wants to reach out to you, would you prefer? I know you got 2, and I actually have my phone here using Instagram, so I'm going to post it here in the box. So
908.
Got it.
995.
Got it.
4893. And I am married, so make sure everybody knows that out there.
Nice. Well, we got that posted. That's posted on Facebook and also on YouTube Live. And then Dave, what's the best contact for you?
908.
Okay.
456 0525.
And guys, probably because these guys are going to get inundated with calls, maybe shoot them a text message first and schedule a time just to respect everybody's time. I'm not saying that they won't help you, but I'm sure a lot of people have got questions and they want to ask things and all kinds of stuff like that. Just shoot them a quick text message and they'll get you on your calendar so that they can work with you guys. They're very both accessible, but we also got to respect everybody's time. So, and then somebody else.
One thing, Jeff. That's a landline that I gave you. I don't. So let me give you my email address, and they can email me questions.
Okay.
It's my name, Stephen with a V, middle initial T as in Thomas. My last name, DEPAUL @gmail.com.
All right. Well, Stephen, sorry, my phone was ringing at the same time. So what was that? I'm sorry. Stephen.
Stephen T as in Thomas.
Yep.
And my last name, Depaul @gmail.com.
I thought there was a period in there somewhere. No.
Years ago, we got rid of the periods.
So Stephen T Depaul @gmail.com. Got it. All right. Perfect. Cool. And Dave, we'll just have you guys can just text him. Sorry about that. Okay, cool. So we hit our 1 hour mark. Does anybody have any parting comments or anything that you guys would like to give as a quick tip here to all of our watchers? We have people all over the place, from Instagram to YouTube Live and Facebook. Anything you guys want to give? Start with you, Stephen.
Sure. Don't be afraid of any house. Like Matt had said, look for the crappiest house in the best neighborhood. There's nothing that you cannot do. The only thing that'll hold you up is your budget, okay? Your qualifications.
Cool. Dave, anything from you, my man?
Yeah, I would just to add to what Matt and Steve and everyone was talking about before. I mean, take advantage of the program, because guys on our end that are flipping properties, we can't compete with the bids that you could make as owner occupied. So the margins aren't there for us, so to speak. It is for a potential buyer, and in the right area, you're making equity overnight with these projects. Budget or what you're going to do. If there's a will, there's a way on these, especially in the nicer areas.
Absolutely. Cool. And the only thing I'll say real quick is, lenders change guidelines all the time, but the FHA program in general has not changed at all. So, feel free to reach out. If I can help you, I will. I'm personally licensed in 2 states, but I have guys all over the country. So I'd be happy to help with anybody if they need anything. And even if you just need questions answered, I don't mind have you bounce them off me. I'm more than willing to do so. You can always text into our team number, and I'll put that here in the comments. And if you need anything, feel free to just hit me up with any questions, and I'll be happy to answer them for you. Even if you're not working with us, if you just need somebody to run something by. I had somebody call me yesterday with some crazy story that some other lender was doing to them, and I basically called BS on what the lender was doing to them. So she took that info, and I think she went back to them, and hopefully she got it worked out. So.
Yeah, you've been great about it, especially in my Facebook group. People ask questions in there all the time, and Jeff you're super active in there, and I'm very grateful, and everyone else is very grateful that you guys chime in on some of this stuff, because there's just a lot of misinformation about this loan out there, guys. So that's really the reason we do this roundtable. It's to kind of get out those questions and kind of put to bed a lot of that misinformation that's slowing you down. And especially with the 203K, if there's a will, there's a way. There's a lot of really great professionals out there, contractors, lenders. The 203K consultants are so incredibly valuable to you guys and are always looking to help, as well as realtors, and then myself, who tries to kind of take the veil from the borrower's end, right? Not being people ask me all the time, am I a lender? Am I am I a contractor? Am I a 203K consultant? No, I'm just a guy that really is jacked up on the 203K loan and trying to, get it out there to more people and try to build a community of people that are looking. Because when I was looking to do this, this didn't exist, right? So I created kind of this community to, be the answer, be the public forum for 203K loans and renovation loans for anyone that might be interested in using it. But this was definitely one of the most receptive ones we did. I think it's a testament to Dave and Steve, you guys being here and taking your time out. I just had a comment. Great to hear point of views from a contractor and a lender and a consultant. It's awesome point of view. Thanks, guys. So thank you guys again for taking your time out, and it's great. A lot of people love this.
Yep.
Thank you.
And we'll try to do it again.
Anytime.
We'll try to do it again too. We actually have I know there's a couple people in the comments that are actually working with Dave and Steve and myself right now, and obviously with you, Matt. So maybe we could try to bring them in and kind of give everybody that whole client experience on one of our next ones. So hopefully in a couple of weeks, we'll do this again.
Awesome.
All right.
Everybody have a very happy and safe and healthy Thanksgiving. And hopefully, yeah, we'll schedule another one of these sometime soon. Usually we do it, guys, on Tuesdays at noon Eastern Standard Time. So we should get a couple more of these going before the end of the year.
Absolutely. Happy Thanksgiving, everybody.
Happy Thanksgiving.
Take care, all. Happy Thanksgiving.
And broadcast.